Hey guys, CPI is in 12 hours and FOMC is in 36 hours. These events are very major. Everyone knows about them. Everyone knows they have major effects on the market. We need to be looking into what are the expectations for these events, what would happen if we undercut the expectations, and what would happen if we overshoot the expectations. We also need to be aware of the critical levels on Bitcoin as a last minute update before these events happen so that people are ready to trade the events and they're very well aware of what's actually going on in the market and what's going on in the charts. It's very important to not get caught up in the volatility. These events, do trigger large amounts of volatility, and a lot of people do experience a large quantity of emotions during the time these events take place. You see price movements of 1,000 USD in a matter of 10 minutes quite often, and no doubt we'll probably be seeing something similar to that again. But we need to look at those critical levels for the reason that I just said. We need to look at the critical levels because wherever the price moves, it doesn't matter if we don't take critical zones. Critical zones are what's important. Let's get into it. Just before we get into it, make sure to check out the links in the pinned comment and the description. We have Crypto Academy courses, which you can learn how to trade in a university type format. We have the VIP group, which the results for which we'll be releasing very shortly. And then we also have the free community discussion Telegram group where you can discuss the market with fellow members of the Wolves Crypto channel. All right, guys, let's get into it. Fresh Bitcoin chart. Starting off with this, fresh Bitcoin chart. What are the critical levels in this chart? Well, I can tell you right now what the critical levels in the medium term are. The first critical level in the medium term is 17.6K. That is the June low. That is where we went in June of this year. That's where we tested the low. We held that low for a period of almost 5 months before finally dropping down. It is now acting as a rejection point, meaning it is the top of the local range. 17.6K, again, top of the local range. That is the critical level to watch to the upside during these events. The critical level to watch to the downside during these events is 15.5K, which is the bottom of the local range, right? So we have a very clear range here on Bitcoin between 15.5 and 17.6. That range spans, about what 2,200 USD, 2,100 USD. It's a 13 to 14% range. At this point in time, we are closer to the top of the range, right? We're about a 10%, a few percent away from the top of the range, actually. If we zoomed in, we can get a more accurate example of how far away we actually are. It would be probably 3%. Yep, 3% from the top of the range, and we are a drop of about 9% to the bottom of the range. So we're on the top side of the range here. We've been consolidating for the past 10 days or so, maybe even a little bit more than that. And we're kind of looking to wait for these events. And when these events happens, the volatility will occur, and that will take us either to the bottom of the range or break us above the top of the range. Those are the critical levels in the short term. Medium term critical level, which is also worth pointing out because this could be tested, it's possible, could be tested during the span of these events in the next 48 hours or so. And that level is this, right? Essentially, the medium-term level, and this is actually a very important level because this level lines up perfectly with the bull market support band, and breaking this level, honestly, would lead to a continuation to the upside. It would lead to a break of a downwards trend, right? That level currently is sitting at 19.7K, which is about, let's go ahead and check it out, a 15% gain from the price we're at now. So for Bitcoin to make significant short-term progress, we need to break 17.6K, and for it to make significant long-term progress, we need to break 19.7K, and more importantly, close the weekly candle above the bull market support band, right? If we do that, if we do get above the bull market support band, close the weekly candle above it, and hence break this yellow downtrending line, that would be a buy signal for Bitcoin, and that's where we would buy the remainder of our reserves and put it into the market, because that would be decent confirmation that the bottom would be in for Bitcoin, in my personal opinion. So yeah, those are the levels you need to watch. 15.5K, 17.6K, and that downtrending yellow line in conjunction with the bull market support band. Those are very, very important levels. And no doubt one of them will be tested within the next 48 to 72 hours as this volatility ramps up. I have no doubt in my mind of that. But moving into shorter term charts, and then we can get into the expectations themselves. Shorter term charts are a little bit kind of all over the place right now, and they have been for a while. Not that they're complicated, it's just they don't look particularly good, right? We have, for example, in the RSI and the 4-hourly chart, a descending channel formation, which is a bullish formation, but at the same time, we have an ascending channel formation, which is a bearish formation. We have bearish divergence playing out here as well. So, it's quite complicated, and we did see a breakdown of this dotted uptrending line. We tested the solid yellow line, and now we're back within that formation there. What we have essentially right now is some sort of ascending broadening wedge formation, although it's very, very messy, and it would be better characterized as just a couple of support lines and a resistance line at this point. But yeah, it doesn't look particularly good. It doesn't look strong. That's not a strong formation right there. If anything, it's quite a weak formation, and I'm not particularly confident about the Bitcoin short term. The reason why I'm not giving it much attention right now, and the reason why I'm not going to give it much attention for the rest of the video is because it's not exactly relevant. Shorter term charts and shorter term market patterns going into something like CPI, going into something like FOMC can be easily invalidated depending on what the results become of those two events. So that's something we're going to look at in a second. But before we do that, we really need to understand the full quantity and the full scale of these events in the next 2 days, right? If we break to the upside, what we're essentially doing, right? And I explained this before, but I'll explain it again in a simpler format. What we're essentially doing is we had a range up here. We have a range down here. If we break to the upside, we break above 17.7K. We are re-entering the upper range, and we are labeling this range as an unconstituted price point, meaning that, there basically isn't enough selling pressure to stay down in that range if we get back above this range, which would be very, very, very good. Now, on the other hand, if we move to the downside, right, and this is where this chart comes into play, if we move to the downside, we break below 15.5K, we are breaking below this 8-year uptrending support line, which is one of the only things other than a horizontal support zone stemming from this candle here back in 2018, right, you see that? One of the only things right now that is actually keeping us afloat. Okay, so breaking below 15.4K on the weekly candle especially would break down that yellow 8-year support line and would break down the horizontal support and would send us plummeting straight downwards towards one of these pink zones at either 13.8K or 11.5K. So that's what's at stake here. Okay, we have a chance to finally get back in a healthy position for Bitcoin and label this entire range as a fake out, or we would break down below an 8-year uptrending support line. The stakes are very high right now. Right, so we need to look into the actual events themselves and the expectations and what that would lead to. Let's get into that. I want to briefly interrupt this video to talk about the BitGet Exchange. The BitGet Exchange has 5 times lower fees than Binance, which is the biggest major exchange in the cryptocurrency market on futures. It also has 0 fees on every single spot pair, so you can trade spot for entirely free, no fees included. It runs events. Right now it's got a FIFA World Cup event sponsored by Messi, the football player. It's got copy trading, strategy trading. It's got exclusive rewards and discounts in the reward center. It's got everything you need for a trader using an exchange. This is the exchange I personally use as a trader for my everyday trading, and I highly recommend everyone does so at the Wolves of Crypto YouTube channel. Sign up using my referral link for exclusive rewards and discounts. That really helps out the channel, and I appreciate it. For my fans from the United States of America, you can sign up using this exchange with a VPN and use the exchange with a VPN and just sign up using my referral link like normal, and you'll be treated like a normal customer because this is also a non-KYC exchange. So make sure to sign up using my referral link in the pinned comment or the description below, and without further ado, let's get back into the video. So it's quite simple. I go over it every time we have a CPI event, every time we have an FOMC event, I go into expectations versus realities, okay? Now, it's very important to note, the actual number itself is highly irrelevant, right? Very important. The actual number itself of CPI, for example, or of FOMC is highly irrelevant. It's whether or not the market has priced in that number that leads to a move when the event happens. Very important to note, okay? So right now, we have 7.7% inflation here in the USA, right? CPI 7.7%. The market is giving a consensus, as you can see here, of 7.3%, meaning that the market itself is expecting a 7.3% inflation reading. So if that inflation number comes in below 7.3%, which is what the market has priced in, the market will pump because it will be lower than expected, which is good. And if it comes in higher than 7.3%, the market will dump because it will be higher than expected, which is bad, okay? Now, some people ask me, well, what do I think inflation's going to be? That's an impossible question to answer. It doesn't work like that. It doesn't matter. And it's not possible for me to have an expectation for what inflation is going to be. The entire market, the whole market is expecting 7.3% as per what it's priced in. That is what I expect it to be. That is what I have to expect it to be. Now, will it be higher or lower? Almost certainly yes. The market is never exactly right. Almost never exactly right. There almost always is a slight deviation because it's highly unpredictable what inflation is due to how they calculate it and due to sudden changes and things towards, there's many factors, right? Not sudden changes, that's completely ridiculous, it's from last month. But you know what I mean, there's many factors to it, it's very hard to calculate as an individual. The point is, the market is expecting 7.3%, so if it comes in lower, we pump, if it comes in higher, we dump. That's generally how it goes. So we need to watch, that will be happening in 12 hours, whether or not CPI, right, will come in higher or lower than 7.3%. Following that, in 36 hours, we have FOMC, which will further complicate things. So we'll have a CPI result. If it comes in lower, we will go up. If it comes in higher, we will go down. Now, please note, there are short-term rationalities, right? It's not always that simple. If CPI comes in lower, you don't enter a 100x long. There's always irrationalities in the short term. I'm talking about medium term. That's what generally happens. Now, 12 hours after that, 24 hours after that reading, which is in 12 hours, in 36 hours here, we have FOMC, which is the same story. The market, 70% chance. This is what it's saying. The market is saying there is a 77% chance of a 50 basis point hike and a 23% chance of a 75 basis point hike. So that if we see a 50 basis point hike, we will probably go up a little bit and mostly stay the same, because that is what the market has predicted. Whereas if we see a 75 basis point hike at a 23% probability, we will go down because the vast majority of the market is expecting something lower. Okay, and that would be bearish. So it's very simple stuff. Very simple stuff. I'll explain one more time just so you guys understand it. You're well aware of it, so that when these events do occur, you understand what the numbers actually mean. If the number comes in lower than expected, it's for CPI, it's good. If it comes in higher than expected, it's bad. Doesn't matter what the actual number is. It matters where it is in relation to the expectation, right, for the short term. FOMC, right, the market's predicting a 50 basis point hike. If it comes in at 75, that's bearish. If it comes in at 25, that's ultra bullish. If it comes in at 50 basis point, that's slightly bullish and mostly neutral, okay? So that's kind of what we're looking at there. Sorry if that's a bit confusing. It's kind of hard to explain. You're throwing around the same words, expectations and realities over and over and over again. But I think most people get the point, right? It's not about the actual number. It's about what the number does in relation to the market's expectations. And guess what? Those events are in 12 hours and 36 hours. I've actually marked them on the chart. Those events will be occurring when these pink vertical lines are met, right? That is the time of when the events are occurring. Okay, and you can see how close we are to those lines. That will stir up volatility. I'm very interested to see what happens. And when those events do occur, I will be making a video. For example, tomorrow we have CPI. I'll be making a video in the hours following CPI, probably a little bit later, 12 hours after. I'll give a chart some time to play out, because as I said, you can see short-term irrationalities, and we'll get into the short term, get into the medium term, and we'll get into the effect that might have on the FOMC predictions, right? Or probabilities, because when CPI comes out, it dramatically changes the probabilities for FOMC. So for example, if CPI comes in dramatically higher, we might see the chances for a 75 basis point hike actually skyrocket, which will dramatically change the market structure. So this is why it's one of the things when people say, oh, Wolf, do you think the market's going to go up or down based on CPI and FOMC? It's like, if it was just one event, I'd be able to tell you. But since it's two events that are largely out of my predictive control, it's very hard to say. We just kind of have to wait and see what happens. But overall, and I've said this before and I'll say it again, overall, I do think it's quite likely that the bottom is actually in for Bitcoin already, right? I do think it's quite likely the bottom was in for 15.5K. And I suppose we'll see whether I'm right or not. Ultimately though, I have said over and over and over again over the last year, ultimately, don't really care where the price bottom is. I care when it is. Ideally, it's in Q4. That's what the 4-year cycle says. Maybe a few weeks into January at the latest, but ideally Q4. That's my prediction. The price point's very hard to say, right? What I can say is that we do have those critical levels that I explained at the start of the video, and you do need to be watching those. Thanks for watching, guys. Hope you enjoyed. I'll catch you tomorrow after CPI. Catch you in the next one.